Right, what is up, everybody, and welcome to the second channel, the first video on the second channel. I want to introduce you to this channel. Basically, we're going to be breaking down trades I take alone and with my one-to-one group. We're going to be going more in depth into the concepts I use, into the models I teach on the main channel, so that you guys can basically put it all together and learn the intricacies that I just don't really have time to teach on the main channel. Now, this first video may be uploaded with my main channel as well, just to push people over here. So if you are coming from the main channel, please do subscribe to Loz Trades More. This is where I will be solely posting trade breakdowns, really detailed stuff. So let's get into the trade breakdown, which was Friday's NASDAQ longs. And I took this with my one-to-one guys, which if I pull up here, you'll see this is the group call recording. And I wanted to see longs come in from this orange box. We trade into it and then trade away from there. So let's get into trading view and break down what I was looking at. Okay, NASDAQ, I always operate, as I teach on the main channel, around certain time windows. Time is everything in the market, and time should be your main edge as a retail trader because things repeat in these markets based around time. And the general concept here, I was trying to frame, are we going to see distribution at 9:30 or manipulation at 9:30? So 9:30 is one of our key times. Sorry, let me make this bigger so we can see it. 9:30 is our key time for New York session, and 9:30 is either going to manipulate or distribute price in one direction. And what we are trying to determine is whether 9:30 is going to be manipulation or whether 9:30 is going to be distribution. And most of the time, I tell my group this all the time, most of the time it will be manipulation. Manipulation is basically a run on stop losses or buy stops or sell stops in the opposite direction to your bias. So you have to establish bias first. And bias is long. Put simply, it's long, and that is due to the market trending higher. If we look at the 4-hour chart, it's been going higher for ages, okay? It's been going higher throughout here, so ideally we want to continue with order flow. It's no different than what retail say about trend is your friend. It's true. The trend is your friend, and you ideally want to follow it. Now, you can see drops in that, and that's where retail gets stopped out, and smart money are pairing their orders for new longs, but basically you want to ideally lean towards taking buys. And that's what I was going into Friday with, that same analysis. And I was asking myself, what have we done prior to 9:30? Because we need to determine whether 9:30 is going to be manipulation or whether 9:30 is going to be distribution. Now, I mentioned 70% of the time or so, it is manipulation. That other 30% is going to be distribution. How do we determine? We determine whether it is going to be distribution or not. Okay, how do we determine whether 9:30 is going to be distribution or whether it's going to be manipulation? There are two ways that we determine 9:30 is going to be distribution. The first is 8:30 red folder news manipulates, which is not this scenario from Friday. 8:30 red folder news causes the manipulation and 9:30 then distributes price. That is not this example, but it does happen. The second is London session manipulates for us. Okay, so if we go down to the 5-minute chart here, and we keep this in mind because this is what we're trying to determine. I operate around time, and you guys should be operating around time as well. Is 9:30 going to be distribution or manipulation? How do we determine whether it is going to be distribution? 1, 8:30 red folder news. 2, London session manipulates. So let's look at this chart here. We want to be operating around time. So if we mark up time first, time is the main thing. You always want to have 9:30 marked up on your screen. Prior to 9:30, what do we have? You're asking who has been punished and what do we have on the screen? Well, you have a range low and you have a connected range high here. Okay, why is this important? Because all throughout this range low and this range high, retail are buying and selling. So we are accumulating positions. People are buying and selling in this area. You have the connected range low, the connected range high. And then London session starts at 2 a.m. and ends about 5 a.m. Eastern Standard Time, okay? Everything I talk about regarding time is Eastern Standard Time. So you have London session. Look at what London session did. It traded down into these lows, these range lows back here, and these relatively equal lows. 1, 2, 3. all relatively equal, okay? So London session manipulated because I already determined I want to be long in this market. I want to follow the trend. London session manipulated. Why is it valid manipulation now? One, because we stopped short and then ran this low once more. That is a key signature you will see. That is 1 drive, 2 drive, 3 drives lower into the range low here. The connected range low. What is a connected range? It is simply the most obvious connected price swing on your screen, which is this low where this move originated and this high where the move stopped. So London session ran down and manipulated. So now we can determine that 930 is going to be distribution. Now that does not mean you instantly long, but you are predicting 930 to be distribution, not manipulation. So when we run out these lows and we go into New York session, we still have this high intact, and we keep this in mind, okay? Always keep this in mind. We've predicted that 930 is going to be distribution. And what you want to look for now is confirmation of that. So when you've determined that it's going to be distribution, so 930 distribution, look for confirmation. And confirmation comes in the form of things like SMT, okay? It comes in the form of displacement. Things like CISD, okay? Change in the state of delivery. Simply closing above down close candles that traded below old lows. And something you will see often is when we have a low broken, that high gets targeted in a buy market. So what we are looking for, once we've now determined 930 is going to be distribution, we are looking for a range to form or a range low to get taken, which also happens here. This move stops there. People buy and sell in this area, and I know it's a small few candles, but that is about an hour and a half. A lot of people are buying and selling in that hour and a half. They get stopped out early. Displacement. That right there is displacement. That is like the algorithm flashing to you that it is ready to move in that direction. So you are, first of all, predicting that 930 is going to be distribution, not manipulation, meaning it is going to trade in your direction. But then you need confirmation to that, because we do not just predict things without confirmation. I am always predicting something. Trading by its nature is prediction, but you need confirmation added to that prediction, okay? And that confirmation is things like displacement. That right there is displacement. Displacement is measured by speed and distance. Look how fast that move away is. It doesn't take much time. There's no resistance there. It's fast, it's quick, it's snappy. It leaves behind fair value gaps, okay? So that fair value gap there, when we trade back down into it, is a valid entry. That's a valid entry. I was recording a video during this time, actually, so I wasn't on the charts, or else I would have taken this long here, right here. Now, I logged on the charts and loaded up a group call for my one-to-one guys at this point, when we were trading here. And I'd already determined that I want to see 930 be distribution today. And what we have down here as well, if I switch to ES, okay, NASDAQ, ES. Look at the difference there on the lows. Look at the lows. These lows here. NASDAQ, ES. SMT, right there. This made a higher low. It didn't take out 5 a.m. lows. Switch back to NASDAQ, it did take out 5 a.m. lows. So that is SMT. That's another added confluence, and I can be even more confident now that 930 is going to be distribution. So where was my actual entry after we've built all of that up? And guys, I'm not sat here speaking like this to myself, right? I'm sat here explaining this to you guys because this is all happening inside my brain. You need to practice this so many times that it's pretty much second nature to yourself. Like, I don't sit here unless I'm making a video like this or explaining to my group or explaining on a one-to-one call. I'm not sat here talking myself through this. This just happens in my head because I've seen it so many times, but not only have I seen it, I've journaled it so many times, and that's the important part, journaling. I have so many, like, I cannot explain how many, countless examples of this exact scenario happening to where I don't panic under pressure. And that's the point you need to get to in your trading. Now, let me stop waffling and get into a bit of entry, right? So we've got all of this happened. Displacement happens, we trade down and fill this fair value gap. When a fair value gap gets completely filled and it is trading in line with your bias, you do not want to see this low taken, okay? Write that down. When a fair value gap gets fully filled and it's in your direction, your directional bias, you do not want to see that low taken again. This is an intermediate term low, and maybe I'll dive into that in another video because it's a whole separate topic. But that is an intermediate term low. Now I'm looking for an entry technique. What does an entry technique look like to me? Either a fair value gap or an inverse fair value gap. So take a look at this red area. If we zoom in here, this fair value gap, people will be shorting this market because 930 is around the corner and people want to get involved before 930. So when we close above that, it becomes a key level for me. Then when we form a bullish fair value gap on the opposing side, it is also a key level for me. This becomes a balanced price range, meaning we should tap into here and expect institutional order flow entry drill. Now I know, okay, a lot of terms, but an institutional order flow entry drill, or IO Fed, is simply where we only trade a wick into the fair value gap. When you have a gap overlapping with a gap and you are bullish, you expect a short wick down into it and catapult away. All right. And again, this comes from hours and hours of studying, journaling. You're not going to get this straight away. You're not going to get to that level straight away. And I do not expect you to, but don't expect yourself to. This took me years. Okay. Institutional order flow entry drill, meaning I want to see a short wick and then catapult higher. I've built in that bias and that narrative behind why 930 should go higher. All right. And then my entry was simply on this inverse fair value gap here. So when we formed this and closed above it, I put a buy limit on this point. And let me just put my position on the screen. So my buy went there. I had my stop loss at this low. Why this low? Because this is the low that fully filled this bullish fair value gap. I do not want to see that traded above. And I targeted just above the range high. Now I can target just above the range high because I aim for 1 to 3s. Why? Because 1 to 3s are the most consistent thing in this game. Meaning you can take 7 losses. And if you're only taking 1 to 3s, you can take 3 wins and you can be profitable. All right. Really think about the maths there. You can take 7 losses. And if you take 3 wins out of 10 trades total, and they are all 1 to 3s or -1, you are up 2% at the end of it. All right. This is why I trade 1 to 3s. Now, usually, if I wasn't in a bullish market, I would just put it at the range high or the rejection block there. But I put it at 1 to 3 because we should rip through this high. And 930 is going to be distribution. And look, 930 doesn't lag around. Trades down and then rockets higher. Look at 930's candle. Isn't it amazing that we can predict that with bias and with narrative and these sort of things? Stop trading blind and start to use these concepts properly. The whole reason I've built this channel, this second channel, is for these in detail breakdowns because I don't think there's enough of it on YouTube. Now, if you guys want to be mentored by me personally and you want one-to-one sessions with me like this, then hit the top link in the description. It'll take you over to my apply page. But please just do subscribe to this new channel. There will be plenty more like this on every single trade I take. So I thank you as always for watching. Please do like the video and I will see you guys next time.